Hurley Investments. This is a Hurley Investments Financial Services commentary for Tuesday, the 29th of 2018. One more time, let me know that everyone can hear me okay, and let's get started. I have a couple things that I want to share with you, but it really falls in line with a simple question. How do you do what you do? Kevin. So if I was to ask you guys, what are some of the secrets to trading? Because that's all I'm doing. I'm trading. Actually, I'm going to change that. I'm more of an investor / trader, not the other way around. Patient. So Maud's seen this a couple times, and actually it's kind of interesting. Lance and David, you guys both said the same thing. I am sorry. Let me get this back over here. Patience. So let me tell you what patience equals today. Down 50, I think it's 52K. And by the way, I am out on the road. My family and I are out here in, I won't need any of that. We're out here in Mesquite, Nevada. Family vacation / Mesquite amateur. So here I am hanging out in Nevada. Would you go open that so it won't be all the time? All right, so here we go. Patience means down 5K or 0.066% versus a, let's see, a NASDAQ down negative 37.26. Leave it. Which was 0.5% or a negative 0.50. Let's make sure I get it right. We have the Dow Jones Industrial Average, which was down a negative 391.64 or a negative 1.58%. And what I'm judged against is the S&P 500, which was down negative 31.47% or 1.16% today. So that's what I'm up against. Now, it's funny because as a registered investment advisor, I still have fear, greed, emotions, anger. I fight all that. In fact, and even looking at today, if I brought the Dow Jones Industrial Average out and I changed it to 0 and we look at today, I'm going to show you just exactly how I got frustrated today. I usually don't do anything the first hour. I just don't. It's not my style. I wait to see how things come back. Boy, that's awful. I want it by minutes, not weekly, daily, days. I want it by minutes. All right, I'm going to do this a little bit different. I am going to get up what I was looking at today. Come on. Sorry, guys. I thought I was a little more prepared than this. Let's just pull up anyone for that matter. And I want a chart. Put you guys back into this. I'm looking for trading. I'm looking for the SPX actually is what I'm looking for. I want a chart. I'm going to pull it out. We're going to go today. So, as it opened up today, as I looked at my first hour, 9, 10, 10:30, and 11. So here we are, where we had a couple peaks. And as I looked at it from 10:30 to 11, I thought, all right, we should be okay today. 11 to 11:30 made me worry, and then we came down to the lows of the day. Now, I kind of giggle a little bit because it seems to me literally at 11:30 Eastern, right here, the East Coast goes to lunch. So at 11:30, I thought, all right, not a big deal. Not a big deal. We're going to be okay because it goes to lunch. And normally this position is where we're going to come back to after lunch. And 11:30 came down, started to come back, and we stalled at 1 o'clock Eastern. And at 1 o'clock, I thought, dang it, we're going to finish at our stall point. And we came awfully close, a little bit lower. Which means, for me, looking at something like today, I'm going to get a little lucky with something like Facebook. Facebook saved me today. I appreciated Facebook. It was up. Apple, down a little bit. I beat the market on Apple today. Baidu, doing okay. Beating the market on Baidu. Visa. So I'm looking at my portfolio in general. Visa matched the market. But I was able to beat the market on Visa because I have a lot of leap long call positions on Visa. Ford. Beat the market on Ford today. Bank of America. Killed me. Bank of America, and I'm looking at something. Come on. When I look at Bank of America, I am bringing up my daily percent. It made me worry a little bit about today because as I brought things into focus, what am I doing? We really don't need this chart yet. Let's free up some bandwidth if I need to. Come on, Hurley. I don't have it. So, got to put them in. I can't show you what I don't have, huh? So, screenshots. Biggest concern today was what? If you were to look at this chart, that's only the Dow. We're not quite bearish on the MACD, but we will be tomorrow. We're just getting our crossovers, but what's my problem looking at this chart? What gave me pause today as I was trying to trade or do what I do? There you go. You got it. Leave it to Lance there. Lance, you are correct. We broke the 50-day on the Dow Jones Industrial Average. We broke it. Because we broke it, we're still not bearish. We're still technically bullish, but turning over and broke the 50-day simple moving average. This makes me concerned because if I go back to all the other charts that I was showing you, right? I had a lot of options expire. I didn't have a spike in volatility yet that it has allowed me to add some short calls. Well, Kevin, there's the spike. Well, yeah, I kind of got it today, but I was looking for something in that 20 range. As we talked last week, we were fighting against the 200. I'm a little worried. I'm a little worried because I'm letting some things run without protection right now. Well, Kevin, I thought you said last week you were going to add on that protection. We had a drop in volatility over the week. You go back and look at my notes. I was going to add some long-term short calls to get through the summer doldrums on our first spike of volatility. We didn't have it until today. So when someone mentions frustration or emotions, for me, I'll be honest with you, anger or frustration is the first thing that I fight in trading the stock market. I don't fight, in all honesty, fear or greed, some of the emotions in general. I fight anger. I fight frustration. I get ticked off. And that's where on some frustrating days, I go hit the golf course. But I looked at the Dow, I thought, we're breaking the 50. So if we're breaking the 50, what's our S&P 500 going to be doing? Most likely, what's our S&P 500 going to be doing if our Dow is breaking the 50-day simple moving average? What do you think? There you go. Thank you, David. Lance, you were there too. Yeah, if I'm breaking the 50-day, right? If I'm breaking that 50-day, well, on the S&P 500, I'm probably breaking it as well. What do you think? Did we break it today? Yes, no, maybe so. We held it. In fact, we even bounced off of it. At the futures, looks like we're down. Looks like we're not doing so good. Most likely because of Hewlett Packard. Let's see if we can get this through. My phone's not catching up for me. Oh, yeah, we're down. Down bigger. Futures, they were down 31. S&P's down 7. 11.5 in the NASDAQ. So, we're down. Makes me worry about tomorrow because our line in the sand is 26.72 and we're up to 26.89.86 for our close. Well, I'm a little bit tech heavy. I'm a little bit financial heavy. So I thought, my NASDAQ, dang it. My NASDAQ is definitely going to have crossed. But the NASDAQ's still bullish. In fact, we just hit a doji and we hit right off the support line. So as I'm trading, I would still say bullish, but turning over. As we're trading or as we're doing what we're doing, I've got my money with you guys as well. I fight some of those same fears, some of the same greed, but for me, some people think I'm ultra competitive. I hate losing. If I lose against the S&P 500, I better have added a significant amount of shares and have something to justify it. But experience has taught me that the fear is an opportunity. Greed is a waste of money. I also have learned I can't catch tops or bottoms of the market, but occasionally I do get close. And yes, even if I'm out here golfing in the 6 o'clock in the morning, golfing in the amateur, the Mesquite Amateur, I end up spending the rest of the day in front of the computer. Rest of the day taking a peek and saying, dang it, when do I add my protection? When am I going to say, you know what, enough's enough? I've got to make sure we're protected. How do we protect? What is true protection on stock ownership? What is true protection on stock ownership? Puts and sell calls. So there's a caller trade, correct? You got it. I'm glad you didn't say just sell calls, Mod, but buy to open a long put. The right to sell at a certain price for a certain period of time. And Jeffrey and I go back all the time. I don't protect all the time like Jeffrey does. Part of that is because I don't paper trade part of it. It's all real. It's all real money. I don't roll stuff indefinitely. My clients want some real returns on their collar trading. So to get those real returns, I protect at a certain price for a certain period of time. That's what I'm doing, which makes a day like today frustrating, or I get angry, but I'm still beating the market. Overall, I still ended up beating the market, and it's what I can live with. So here's the next question. How do you decide what you can live with? How do you decide what you can live with? And I'm going to give you a little because. because you will lose or be losing at times. And Lance, I'm going to specifically ask you four. How do you four decide what you can live with? How do you four decide what you can live with? Steve, Ida, Mary, you guys are all welcome to answer, but primarily Rich, Maud, Steve, and Dave. Alan, go ahead and answer too if you want to. How do you decide what you can live with? And if you don't know, you're welcome to put some question marks in, but this is a personal question. This isn't, there's no right answer here. Thank you, Maud. Maud is kind enough to say she doesn't know. Lance, I can't handle losing, so I overprotect and usually end up losing more money. So that's the losing side, Lance, but how do you decide what you can live with? Rich, Dave, Steve, Alan, Mary? We actually have two Steves. I think we got a Steve Ball in. Steve Lings, can you answer? Don't know. Very interesting one from Dave. Sometimes you can't live with it, but you don't realize until after it happens. Kind of a tough question, huh? So let me go back to this way. How did you live with it in 2008? How do you live with it in 2008? Wow. I have total paralysis. I lost a ton of money and I haven't made it back. Anger, frustration, and throwing things against the wall. I'm going to keep that person to myself. I'm going to go back on the total paralysis, right? I will tell you, it was the first time I saw anything like that. It was the first time any of us in our lifetimes have dealt with the market to that degree. And because of that, because I'll be honest with you, I was scared. I started adding puts in January as the market fell down. And every time we broke a support level, I'd put them back on. I'd put on another pair, another set. At one point, I had 3 sets of long puts for every stock that I had. Well, that's not true on everyone. On some of the more volatile stocks, I had 3 sets of long puts staggered all the way down. And in all honesty, Maud, if I can make the comment for you, you're the first one that mentioned close to total paralysis. Yes, there were times in flash crashes and stuff that I sat there, I was just like, holy bleepity bleep. But I found usually if you extend your time horizon, and there's not a set time, but if you extend your time horizon, you can formulate a plan to, quote unquote, get through the tough times in the market. If I hadn't learned to make up some of the downside and add more shares, I would have been frustrated beyond belief. And sometimes when you are close to retirement or in retirement, you can't afford to lose. I understand that. I get that. But it doesn't mean you're extending out your time horizon for decades or even years. Sometimes you extend your time horizon out a week. This is a down week. Here's what I'm going to do different. I'm going to make it up next week. Sometimes you put out a month, a quarter. Excuse me. Maybe a year. But you better not be putting out for years or decades. That's not a plan. That's the buy and hope, and you're screwed. We went through our lost decade and then a couple years. You can't afford to buy and hold and just sit. Investment, trading, it requires more active management. But you're not going to be right all the time. That's what scares me. A lot of people ask me, well, why don't you spread trade more? Because when you're wrong on spread trading, what happens? There you go. When you're wrong on spread trading, you lose your money. Time decay gets you. You're out of money. You get run over. You can lose big time. Good comments there. You're right. If you're just spread trading, getting whipsawed, you run out of money. Take your losses. You can adjust to lessen losses. But you run out of money and you're done. That is unacceptable to me. My anger, frustration, closing out a trade at a loss, a spread trade, kills me. My personality does not allow me to spread trade. I can't do it. I can't do it with consistency to not be angry and miss out on life. Hence, I collar trade, or technically I can wait for forever for stocks to come back. I don't lower cost basis. I make up downward movement and I add shares because I want to get the bounces back up. To just lower cost basis means I will always kill you on the upside because I've got a higher percentage making better returns. It's a Warren Buffett theory, right? So let me ask you, on a day like today, do you think today was a hard day in the market? Leave it to Lance. Today sucked. I didn't ask if it sucked. I asked, did you think today was a hard day in the market? Ooh, couple great comments here, both from the women. Depends on your perspective. It might have been tough, but it doesn't mean it's over. Two women just made two excellent comments there, and I agree with both of them. Depends on your perspective. Today was not a great day. but it doesn't mean that we're not going to make it all up by the end of the week. Move my time horizon out a little bit. So I must enjoy saying this. Today, Italy, I guess let me put it this way. I understand, right? It was announced that Italy over the weekend fought off a consortium, probably not the word I'm looking for, or new group that wanted control of the government to exit the euro. Which is kind of ridiculous because the euro is what saved them, right? And Morgan Stanley. Geez, come on, Hurley, spell. Morgan Stanley / JP Morgan both said that how did they say it? Morgan Stanley had the bigger one. They were down over 6% today. Wealth management business slowed. So when you hear that wealth management business slowed, what does that mean? What does it mean when you hear a big bank tell you wealth management business slowed? And I'm afraid to answer. Not necessarily less trading, Mod. Definitely managing less money. But there you go. I was going to say, if you're managing less money, how does that happen? Mod said bad trades. That's exactly. I'm going to apologize, but I'm going to give it to Lance. They lost their asses last quarter. Yeah, there it is. In all honesty, if you were rotated or cycled out of older bonds into new bonds for something that's going to make you a lot more money, you probably lost in that 7 to 11% range. A lot of people were short the market in January, reversed those trades, went long. They lost coming and going. I know more about Goldman Sachs. I don't know too much about Morgan Stanley, JP Morgan. But the comment from my constituents there is right along with what Lance has said. They got their butts handed to them. It is. They got their butts handed to them. And in doing so, they're already prepping for how well they're not going to do at the earnings coming up in July. Lance, I'm not going to publish what you said. So for that reason, we're getting killed. Consumer confidence is at a 128.0 versus an estimated 127.5. And K Schiller came in at a 6.8 versus an estimated 6.4. I did read an interesting article over the weekend, not one that I was willing to share with you or print, but that shame on the Fed. Maybe the Fed is spending too much time looking at the surveys from slanted individuals, the surveys for not a big enough piece of the pie for the ISM services and manufacturing index, that maybe they're making their choices based off of the inexperienced, unrelated part of the real numbers that we have. A question just came in: going to cash a tactic? If yes, when? So going to cash is a tactic for an individual, but the big bankers, the money managers, they have to be like 96, 97% fully vested for them to be able to charge you. For the people like me, the registered investment advisors, the small guys, I can go fully to cash, but if you look at last week, I don't want to miss any upswing in the market. I can weather some of these storms with long puts or longer dated covered calls. So going to cash is not an option for me, because if I was charging someone, they'd look at me and say, well, heck, Kevin, I could go to cash myself. But going to cash is definitely an option for an individual investor. It's not an investor for big money, institutional money, because they have to have a certain percentage in the stock market. If you were to ask me where we're going to be at the end of the week, I would say higher. And I'm going to tell you higher based on one simple technical point, that we're bouncing off of the 50-day simple moving average on the S&P 500. That's where I would say we'd be higher by the end of the week. Today was a good selling day. We did come back. I bet we also had a pronounced sell in this week to end out the month of May, where you saw funds do some selling. That's why we had our big drop down. We did come back towards the end of the day as they repositioned. We have tomorrow, Thursday, before the end of the month, have some window dressing put back on Friday, June 1st. So definitely historical patterns and so forth, I'd say we'd be higher from where we are today at the end of the week. What's going to push us higher? Not necessarily earnings. In fact, Hewlett Packard probably laid an egg today. I don't know, but by seeing how far the NASDAQ is, Hewlett Packard or Salesforce could have laid an egg today. Big run of retail coming up, second week, probably last week of big retail. GDP, ADP tomorrow will be important, so futures don't matter till those announcements come out. And obviously, average work week will move our markets higher on Friday. Kind of a good double whammy. I still think our non-farm payroll, our private stuff, unemployment, construction spending, we all should look pretty good here. So because we all look pretty good, it's also the start of a new month. Friday would be my up day. Wednesday, Thursday, we're looking at China announcing their numbers. They fake their numbers anyway, so I don't put too much weight into it, but we'll probably have a nice little China bump there. When you ask how I'm looking to trade, still looking for a 20 VIX to add 2 to 3 month out in time short calls to stock positions. There it is, volatile spike. I found a couple interesting articles I wanted to share with you. Goldman Sachs, the fiscal outlook for the U.S. is not good. They're looking out into the future, 2019 most likely. They go out even a little bit later, but yes, we're in deep trouble out in the future because of our debt. Trend demand in China cuts trade by 200 billion, defies the law of economics. I thought this was very interesting, and for the first time, I think I am also siding with economics and saying, you know, they can't cut the 200 billion. It's just not there, unless they stock up on goods, but I don't see it. I don't see it. Pretty interesting read, but yes, really doesn't make sense on how China is going to catch up a $200 billion trade deficit. Historical patterns, valuations, investor positions suggest choppy sideways trading this summer. Pretty interesting. This one came out. I might need to get this one back in here for you. It looks like I didn't cut and paste it correctly. I think this one came out yesterday, so actually came out on Friday. So leave it to Mike Santoli to call the volatility on a day like today. And then some interesting, these two men paid over $650,000 for lunch with Warren Buffett. Here are the 3 things they learned. Approach everything with integrity, get comfortable saying no, and do what you love. I agree with 2 of those 3. I obviously think if you're looking to be successful in the market, you must do it with integrity. You have to be comfortable saying no, but to suggest people try to work and do what they love, that sometimes doesn't pay the bills for your family. I do happen to love what I do, but I know plenty of people that do not. But again, I think if they're providing well for their family and at least they like what they do for work, you deal with it. You go with it as you can, right? You do the best you can. Pretty interesting articles, though. I want you to be able to read them if you have the chance. I also have the links in there if you want to get all the charts, because sometimes the charts don't come across. But what questions do you have for me? What questions can I answer for you guys today? Trying to help you out a little bit on the way I look at the market and what I see. Thank you. So I'm assuming, Lance, your questions were answered and you're just saying thank you for today, and you're welcome, sir. I think it's easy to hold a level of integrity when you no longer care or have your ego in line with saying, hey, I'm doing better than you, I'm making this, I'm doing that. So thank you for letting me be me. Any questions all I can answer for anyone else? Give you 30 seconds here to type something in. If not, guys, have a wonderful week. I hope on days like today, these chat sessions are helpful for you. I hope it gives you a level of understanding of what I think and what I'm going through. And most importantly, I hope that little things that I do here help you out, give you some nuggets of thought that can help you and affect you in what you're doing yourself. Guys, have a wonderful week. Enjoy the holidays with your family. Hopefully you did over Memorial Day. And I look forward to talking to everyone again next Tuesday. Guys, have a great night. Appreciate your time. Thank you very much. Bye-bye.